What do you think is driving this second day of gains for Chinese equities? Sam was pointing to the fact that this is perhaps more a sectoral move here based on positive headlines out of Gina Raimondo's visit. At the same time, we have yesterday's stimulus measures also fitting into the market. Can you pinpoint why we're seeing another day of gains in the mainland markets?
Well, overall, I do really think that the positioning is extremely light in China. Valuation is cheap. For a reason, macroeconomic numbers are extremely weak. We probably have a big question mark on reaching the 5% target by the government. But because positioning is so light, every incremental positive news can contribute to this market to trade up. And this looks to me like a bear trap, and it could become a pain trade over the next couple of weeks. And that's how the market is reacting. It's actually reacting really strongly to positive news, which are maybe not that concrete, but they're pointing at that the government is working in the right directions. If it's regulatory laws, if it's stimulus, if it's discussion with the US on the trade war side, and all these aspects are actually adding to a positive market. So I do think the more news we go in this direction, the more the market actually can go back to the levels we have seen at the beginning of the year.
Okay, a Chinese equity bear trap. Can you expand on what that might mean for the forward trajectory for stocks here?
Look, structurally, there's a lot of question marks, and the economy is not in a good shape. The rebound we see is mainly coming from consumer side. We all know the issues with the housing market. We know the issue with the debt level. So from a structural perspective, we are probably a bit more cautious on China, but I really do think there's a tactical trade shaping up over the next couple of weeks, if not months, given the low valuation we see. Now, what we see that the government is starting to backtrap some of the regulatory constraints they have put on some of the companies, particularly on the tech space. We see discussion on certain IPOs, which are probably coming up again. We also see that the stimulus is going the right direction, targeting some of the consumers, particularly EV cars. We see positive reaction also there. So a lot is pointing to the direction that the government has sort of bad news translate into good news, because it's forcing the government to actually unwind some of the regular measures they actually have put in place. The same on the housing market as well. And therefore, we do see in an environment where we actually still have positive earnings growth, that equities really look light positioned. They are cheap. Also, particularly if you compare some of the tech names, for example, in the US, which we think really are expensive at this point. And so this is a pair trade. And I do think a lot of hedge funds are also probably mispositioned in this area. And any move upwards will put more pressure to close maybe some of the underweights we currently see in the positioning of some of the investors.